Innventure is an industrial growth conglomerate focusing on building companies with billion-dollar valuations by commercializing breakthrough technology solutions. Roland Austrup has served as Innventure's Chief Growth Officer since June 2024 and as a member of Innventure's Executive Committee since 2023. Roland, thank you and for being here. It's wonderful.
Thank you.
Yeah, so I was going through your website, just kind of studying your business model. It is very unique. I don't recall ever talking to a company that does exactly what you do. So why don't you lay the groundwork? What does Innventure do?
Great. Well, I don't know any other company that's like us, by the way. We create companies from the ground up. We focus on working with large cap multinational companies to commercialize transformative technologies that they've developed. And we find that is a great ore body for us to find great ideas because multinationals have deep R&D budgets. They have purposeful driven research. They try to do research for solutions that they can't find in the market, but they're not necessarily the right one to commercialize the technology. And that's where we come in.
Okay. So let me make sure I understand this right. So the big company, the multinational, spends the money doing the research and development, come up with some amazing solutions to whatever problems, but they are not able for whatever reason to bring that to market. And that's where you come in and take over that technology?
Yeah, and I wouldn't say it's that they're not able to. It's not their core skill set or their core mandate.
Okay.
For the first two companies we created, as an example, one is polypropylene recycling and the other one is sustainable packaging. Both of those technologies came from Procter & Gamble. They want their product going into more sustainable packaging, but they don't want to be in the packaging business. So they're looking for someone to create that solution so that they can be a customer for that product.
And you were talking about how much money is spent on research and development, how much of it never actually gets used. Explain those numbers.
Yeah, well, it's a big number. If you look at the top 100 corporate R&D spenders, it's somewhere between $700 billion and $1 trillion a year in R&D, and probably in order around 70% of that will never find its way to the market.
Okay, and you mentioned the two companies from P&G. So how does that work? Do you buy like the patent or the technology, and then it's yours, and you can launch a business just based on that? How does that process?
That's correct. So in the case of P&G, we obtained global exclusive licenses. In the case of the third company we created, Excelsius, which is data center cooling, we acquired that technology from Nokia.
Okay. And then you have burned through significant capital as part of the IPO process, which is a year ago or so?
Just a little over a year ago, exactly.
Okay.
Yeah.
And cleaning up the balance sheet. So now you've been a public company for a year. So what's next, and how does that, being a public company for a year and maturing, how does that feel and position yourself for the company?
Well, I think it brings us a tremendous amount of credibility. As the whole process of creating companies is not an inexpensive process. Mm-hmm. You're starting something from the ground up, and you have to build the entire company, staff it up, get to market. So it is an expensive value proposition. Since inception, Innventure was started about 10 years ago, and in that time, we've spent about $170 million, but we've created about $860 million in value. Already our shareholders have received back about $460 million from the first company that we created, PureCycle, which we took public in 2021.
And then what do you look for when you look for this patents and this technology? Are there macro trends that you're trying to kind of get involved with, or how does that work?
Yeah, again, Excelsius is a great example. So it's data center cooling. It's critical infrastructure for Industry 4.0 and the whole convergence of high-performance compute and AI. But I would distill it down to three key things that we look for. We first look for an opportunity, so a growth story, as you mentioned, where there's a significant market need, and the multinational that we're working with has developed a solution. And that solution is unique. We can't see it elsewhere in the marketplace. So really what we're doing on our first screen is saying, is there a multi-billion-dollar opportunity? And do we have a moat around it? Do we have a unique technology around it? Even if it's just a time moat, we're first to market. Do we have a moat? The second thing we then have to do is look at the solution, make sure it's technically valid. It can be scaled up. There's no technology risk left. And then the third thing we look for is economic value. We don't want to have oh, that's very cute. That's a nice to have solution. We want solutions that are must have solutions, that the market needs it. And there has to be a compelling economic value proposition. There's got to be a cost savings, a revenue generation for the customer, and there has to be enough margin left over for us. So it's the quantification of the model that we
Interesting. Because there are a lot of kind of whiz-bang things coming out, but you're like, well, people actually pay for this. You know,
exactly.
It's really the bottom line of what you're looking at.
Yeah, I mean, inventors invent things they're interested in.
Yeah.
Corporate R&D budgets focus on things that are needed.
Where are you seeing growth right now?
We're seeing substantial growth from our third company. So as I mentioned, we've created substantial value from our first company, PureCycle, which we took public. Our third company, Excelsius, is at the really at the tip of the spear of cooling technology that's needed. It's not, again, a nice to have, it's a must have technology because rack power densities are exploding.
Absolutely. I mean, all the data center build out that's going on. It's just
yeah.
astounding. So, and then once you have these companies, do you spin them off into public companies or do you have like a conglomerate umbrella?
The model today is a conglomerate model. When Innventure was first created, it was more of the former. It was more of a wash, rinse, repeat. Let's build companies, let's monetize them, let's distribute the gains out to shareholders. When I joined the company, I joined it back in 2021, it was to shift that focus to be more of a conglomerate. So where we continue to own our company, and rather than raise outside capital, we raise capital at the Innventure level, maintain majority control, consolidate the financials, and become an operating conglomerate with a high earnings per share growth rate. And that's how our investors then get liquidity. We don't have to sell our businesses. We hold them, we increase value, and our shareholders get value because our share price appreciates along with that.
So what's next then for the company? As you strategize, you've got year one as a public company under the belt. What happens next?
Well, the big thing for 26 is really just putting the puck in that, showing the market that we are on a very high revenue and earnings trajectory for our third company, Excelsius. And that will show up in our financials because we're the majority shareholder. We consolidate the financials of Excelsius. So this year, it's more about not the next company we want to create. It's about proving to the market everything we told them for the last couple of years. You know,
it reminds me a little bit of Berkshire Hathaway, actually.
Structurally, it's very similar to a Berkshire or even a Roper Technology in the sense that those are operating conglomerates that have underlying businesses whose financials they consolidate and grow. So yeah, structurally, that's a very good analogy.
Yeah, I mean, all kinds of various, there's jewelry stores and furniture stores and Apple, I think they own part of too. So yeah.
Yeah, the difference is we don't buy or invest in other businesses. We only start them from the ground up. And that's what makes Innventure very unique. I mean, if you think about it, it's like a venture capital fund, but in the form of a public company. So investors who own Innventure are basically getting a portfolio of companies we've created, but they're not locked into LP/GP structures.
Okay.
Right.
How can somebody follow Innventure, find out more about the business?
At our website, of course, www.innventure.com, and also just following us as a public company. Part of the reason for being public was so that investors could have a lot of transparency. They can see us in interviews like this, in our earnings releases, in analyst reports. So we intend to be highly visible. We've always been visible with our shareholders, and we intend to do that going forward.
Okay, Roland, thank you so much.
Well, thank you very much for having me.